YouTube, what's good? Welcome back. So today took another loss. So we're on the 2nd of June 2026, and yeah, you'll obviously have seen in the title of the video we took that back-to-back loss today. So three losses on the bounce, and the damage isn't actually too bad. Now there's a reason for this, and we'll go through everything together. Because this is one of the most frustrating trades I've been involved with in a long time. Now, obviously, we had a trade the other day that went incredibly in our favour where we made quite a bit of money and had a winning trade over the course of 2 minutes. Today was kind of the reverse effect of that. And I actually think I said in that video, sometimes it goes for you, sometimes it goes against you. And that is literally just trading. I remember the feeling I had today, and it was a bit of a mad one because I was texting my mate who's in Thailand at the moment. So I was texting him and I was saying like it's such an annoying feeling because everything ticked every box today. And I wanted to trade earlier. I didn't. I stuck to my strategy. I held off, remained patient, and I executed my trade at the right time. And it will make more sense when we go through it. So I'm just going to leave it there. But it just ended up being frustrating. But the good thing is, the damage across the three accounts collectively isn't bad. So we lost $419 today. Rounded up, it's 420. So I will I'll quickly just show you that. So that's how the account looks for the month of June as a collective. We're down at 1,835, which again I always say is easily recovered. So in terms of actually losing, I'm not mad at the fact that I lost today. I think it was just the way in which I lost because it price doesn't owe you anything. That's the most important thing. But I didn't deserve to lose, is what I would say. So we're just going to go straight into everything. Now, obviously, you can see during Asia session we had a slight move down, and then we obviously made this big move up coming into London session. And what I wanted was a retracement coming into market open. So you can obviously see we opened at 230 here, and we made a bit of a move down. Now, before I cover that, what I want to say is there's quite a lot of area for price to fill, which it ended up doing. Now, I didn't think price was ever going to come as low as these targets that I've got marked out here. They were just simply there just in case, but I didn't ever think that was going to be the reason. And the reason for that is just price would have had to move quite smoothly through all of this range here. What I actually thought would happen is what played out. We're all-time highs anyway, so we all should be aware of how that goes by now. But I thought there would be a retracement, fill price within these areas, and then we would move higher. Now, something that I marked out at the time was equilibrium. So obviously, equilibrium is the bottom of a move up to the top of the move. So we've got the low down here up until this high here. So the low being the bottom wick of this candle to the high top wick of that candle there. And for those that don't know or are new, I'm not trying to teach you any of this. Go and watch other people. Go and watch. There's plenty of people on YouTube that are going to teach you. But for those that don't know, I will just quickly go over it. So a high and a low is formed by a down candle or an up candle being by each other. So for example, this up candle next to an up candle here, there's no low in that move. Whereas if we've got this high, we've got this up candle here and then a down closing candle as well, that forms a new low, if that makes sense. So we've got this low up to this high here. Obviously, this is now high because we've got what? A down closing candle by it. So that forms the high. So equilibrium is the bottom of the move up to the top of the move. And what essentially equilibrium is showing you is a discount in price. Now, I use equilibrium alongside other confluences, so like a fair value gap and price can fill a certain range, and it's just showing me that it's entered a discounted range. So I wanted price to move into this area, and it did quite efficiently. Now we filled all three of these areas that I had to target. So the bottom one being that you can see we whipped into that fair value gap, fill price in equilibrium, and we respected this whole range and then began to move up. So on the higher time frame, even during session, we were, bullish. So I was looking for a movement off of that. Now, coming on to the 15-minute, this is where not where my trade idea was formed. I actually think it was more on the 5-minute than the 15 today. I do believe that the 15 is very, very powerful when used correctly, but I just didn't think there was enough movement to be on the 15-minute, meaning that we would probably have already made that move up or down by the time another 15-minute closure had happened. So I was just more on the 5 today. So what I did pair with equilibrium and that 1 hour fair value gap being filled was this. So we've just got London low down here to that low here again. We've got down closing candle followed by an up closing candle forming a new low. And then on ES, we had this market opened differently on ES, but ES never come down and swept London lows. So this helped us form an SMT there between the two pairs. Now, obviously, we'd filled that 1 hourly fair value gap and we'd hit equilibrium. So I actually had a different trade planned out to the one I took early doors. Now, this to me, it was on NQ, sorry, would have been an absolute banger of a trade, but I wasn't 100% convinced by it. And this was a trade more so based off of my understanding of the market and seeing repetitive patterns repeat over and over and over again, just market experience. So I wasn't entirely convinced by it, so I sat on my hands. I didn't trade. Now I'm just going to mark out what the trade would have been because it would have been an absolute banger. And I do have a screenshot of it at the time. In fact, I actually will leave the screenshot attached now, just to prove to you that I did have this trade marked out, but I didn't enter off of it, so it doesn't really matter. But I just want to quickly cover why I was looking at a position here. So we've obviously got this high here, and then it had price marked out like this. So you're back with me now, or at least you should be. So the idea behind this trade here is I wanted price to, and I didn't enter. I didn't enter this, so this wasn't a trade I take. I'm saying this the idea behind this trade just because it was I had it in mind, but I didn't enter it. I was hesitant, and I decided just to sit on my hands. I wish I'd have taken this trade. Obviously, looking back at it now, but hindsight's a beautiful thing. So we had this high here. Obviously, when price closed above this level, that was when I was going to enter. So if I was going to do it, I should have entered on this 243 candle closure here. So I would have entered just probably around there if it entered quick enough. Now, the idea behind this is we'd obviously broke structure. We've got the SMT. We had 1 hour equilibrium paired with that 1 hour fair value gap being filled and respected. Bullish uptrend back towards all-time highs. Now, my target wasn't all-time highs. It was just below it. So we obviously would have made this heavy move up and then retrace before hitting my target over here around 4 o'clock. So that was the idea behind the trade. Now, where I would have moved my stops to break even is on the reversal. Was disrespecting this 5-minute fair value gap. So as you can see, we've got, and I'm just going to quickly mark it out because sometimes it can get a bit lost. Now, obviously, we've got this bearish fair value gap 5-minute that was formed once price moved smoothly through this, because that's what I believed would have happened. I thought we weren't just going to fill this range. We were now going to move smoothly through that range there. Once this candle would have closed, I would have moved my stops to break even, and as you can see, we wouldn't have come back down, to even tap me back out at break even. So it would have been a good trade. Obviously, I didn't take it, but I did want to cover it because, obviously, it's part of my learning experience that maybe in future, if that does end up happening again, and something that the market's telling me these confluences are, built off of something. So, maybe be a bit more confident and take that, because I would have, had a good trade today and I would have been recapping a winning trade rather than a losing trade. Now, obviously, where we did enter was after this 5 minute inversion. So price had moved up. What did I want to see from here? I actually moved this over. This isn't right. 1 second. Oh, yeah, no, it is right. Sorry, my bad. Yeah, so what I wanted to see was price retrace into this 5 minute range here. So we'd inverse that 5 minute gap here. I wanted to see price retrace into that range right there. Now, as you can see, ignore this move down here. Just pay attention to this one. So we'd obviously moved into that, and then on the 3 minute as well, we'd obviously moved into this range here, this gap, filled price of that range, and then from there, this is where I then looked for my entry. So on the 3 minute, paired with that 5 minute, we'd hit both ranges, we'd filled both gaps. Obviously, you can see that candle there respected that range, and then we began to move higher. So obviously from there, I filtered down to the 1 minute. So we've got a 5 minute that disrespected a bearish fair value gap. Then we respected a bullish fair value gap both on the 5 minute and the 3 minute. And then as you can see here, when we moved above this high here, so I'm going to mark that in red for you. When we moved above this high here, I entered on this candle closure here. So that's where we got filled in terms of price. It just retraced slightly. Now we made a move up, and I thought my entry was absolutely solid. This candle here, where you can see this massive move down, which I'm going to cover in a moment. I think it was about $275 up. So within literally 30-40 seconds, I was up quite a bit, and I thought, right, this is a great entry. We're going to move smoothly now, and we're going to move back through to all-time highs, which was my target on this trade. Now, this is where it got frustrating for me. I literally, and I'm not even kidding you, I looked away from my phone. I was up $300 in profit, roughly, something like that. I looked back at my phone, and I was stopped out of the trade. Now, this is 3 o'clock news. I wasn't anticipating that candle right there. Today was orange folder news. That is, so we had job openings. And for those that haven't seen this before, because I certainly haven't showed it on my recaps, this is Forex Factory. So news can be a really important thing to consider. You know, there can be days where you simply do not trade because of news. You know, today wasn't one of those days. I wasn't expecting anything to really affect price how it did today. Like I say, we literally had job openings at 3 o'clock, and unfortunately enough for me, we literally just wicked below these lows here, stopped me out, and then moved higher. Now I wouldn't have hit my take profit here, but this move here down wouldn't have stopped me out. Yeah, so yeah, it wouldn't have stopped me out. So I would have been in the trade. Now, whether I would have moved my stops to break even at this point here, I don't know is the honest answer, because obviously we would have gone on to eventually hit take profit, but I just shut my phone off because I was so frustrated at the time. I was literally in the trade for no longer than a minute, and I knew it wasn't because of the trade idea was wrong. I knew that price was going to go on to hit all-time highs, which it did. I didn't think that this was a bad stop loss position. There was definitely enough room or maneuver from a price to move. I just wasn't expecting orange folder news, and certainly not job openings to affect it that much, where we literally just wicked down and then wicked straight back up. Now, where I say I was actually unfortunate, so I don't know really whether to view today as unfortunate or fortunate. This is where the damage was limited. Because the move was that quick, where it stopped us out and moved back up, one of the accounts was stopped out at about minus 500 down here at the stop loss. The other two accounts were stopped out at plus 43. So I'm going to leave a screenshot. So two of the following accounts are exactly the same. So you're going to see one of the one that was stopped out at 43, and then you'll see the one that was stopped out at minus 500. So now the difference between the accounts is even greater than it originally was. I think the difference is about 1,000 between the lead account and the two following accounts. So damage limitation wise, it actually wasn't too bad today, and I was obviously quite fortunate in that respect, but then unfortunate in the fact that this happened today. So look, like I said to you at the start of the video, this can happen. The other day, we had a big candle to the upside where I went on to hit my take profit in about a minute and a half. Today, it was the adverse effect where I was stopped out with one wick down in a matter of, I think it literally must have gone down up. So a matter of a second, then I was out of the trade, and it made me go on to lose today. So that's just how it can happen. Again, like I said yesterday, I'm not going to get down about losing. It's a part of trading. One win brings you back, two certainly brings you back, and more. So where I've lost 3 in a row, we can quite equally go on and win 2 in a row, 3 in a row. We could even have a bigger streak than that. So I'm going to stay patient, stay disciplined, keep doing what I'm doing, and I'm going to show you that hard work, discipline, and patience pays off. That's what I want to get out of this. So hopefully I can do that. And yeah, that is everything that I want to cover today. Just one of those days, so hopefully we'll bounce back tomorrow. And yeah, I'm going to leave a screenshot of the accounts just so you can see the updated balance. So that'll be on your screen now. And just while that's going through, what can I give you? What can I give you to work with? I think I've really give you everything, to be honest, today that I really want to go through. I think, again, the main message I want to put across is consistency is the biggest thing that you can focus on. Don't get down. Don't get hard about yourself losing. You're going to have worse days than others. You're going to have worse weeks than others. Just look at the bigger picture. Some days can be tougher. You can lose accounts. You can lose trades. You can lose 300 pounds. But this is trading. And if you're not built for accepting that and taking it on board and learning from it, then unfortunately the tough reality of it is that trading isn't for you, because this isn't going to happen. I think I either said it in the video or the video before that you cannot win every trade that you put on. It is virtually impossible. There's millions and millions and millions of different possibilities that can happen within a trade, and if you can't handle risking set amount of money that you've put on because of X confluences, then and you're going to get mad because you got stopped out of a trade or 2 trades or 3 trades in a row, whatever it may be. If you're going to get mad at that, then go and find something else to do, because this isn't for you. It will definitely happen to you, and you can either learn quickly or you can learn the hard way. I had to learn the hard way. Many people that you watch online, they also learn the hard way, and they'll probably tell you that themselves. They'll probably cover that in their own videos. If you want to pick up anything from this, because I'm not here to teach you a strategy, I will never probably do that. Yeah, I can't see myself doing that anyway. But I'm not here to teach you how to trade, or what to take or what to look for. I might give little bits of advice like I did with equilibrium today or stuff like that, but it's not me teaching you on what to do. Go and watch someone else for that. But if you can take anything from what I'm showing you, is learn to accept a loss. Like, just learn to take a loss and put your phone down. If you lose, don't trade again. If you win, don't trade again. The market is a brutal place, and it will evaporate your money quickly if you're not careful with it. And if you get greedy and if you get impatient, it will do some pretty damageable things to you. So if you're going to take anything away from any of my videos that you watch, accept a loss. Learn to accept it. Learn to embrace it. And my best friend Cal, he told me it's not a loss if it's a lesson, and it's always stuck with me because it's so true. Every loss that I take, there's always a lesson from it, and if you have that mindset, you'll go places for sure, because with anything in life, there's always going to be a setback. There's always going to be a reason to go, oh, that was unfortunate, that was unlucky. There's always a reason to reflect on something. It's never a plain sailing, smooth journey upwards. There's always going to be something that's going to set you back or hold you back, and it's just about adapting, overcoming, learning, and becoming a better version of yourself. So that is my rant today. Take that on board. And like I said to you, you can either learn it quickly, you can either take that on board and take it into your trading, or if you stick with it, you will learn the hard way, as did I, as did many people. But that's going to cover everything. We're going to leave it there. So yeah, if we trade again tomorrow, we will be back, and hopefully we can turn things around. But that is all for today. Thanks for tuning in. Like, subscribe, comment, and I will catch you in the next one. See you later.